In the heart of Central America, a monumental project is quietly taking shape, one that could dramatically alter the landscape of global commerce and transportation for decades to come. This ambitious endeavor is poised to reshape global trade routes, offering a new path between the Atlantic and Pacific Oceans, and potentially rewriting the rules of international shipping. Fueled by massive Chinese investment, the Nicaragua Canal is no longer just a distant dream. With a staggering $50 billion in backing, it stands as a real contender, set to challenge the Panama Canal's century-long reign as the region's primary maritime gateway. The timing couldn't be more critical. The Panama Canal, once hailed as an engineering marvel, now faces mounting challenges: water shortages, climate-related disruptions, and operational bottlenecks that have left ships waiting for days. The world is beginning to question the wisdom of relying on a single, vulnerable choke point for so much of its trade. China's involvement in the Nicaragua Canal isn't just about improving logistics or boosting trade efficiency. It's a strategic move, a bid for greater power and influence in the Western Hemisphere, and a way to secure its own trade interests far from home. The Hong Kong-Nicaragua Canal Development Investment Company, with deep connections to Beijing, is leading the charge. By aligning the canal with China's sweeping Belt and Road Initiative, the project becomes part of a much larger vision to connect continents and control key trade arteries. If completed, the Nicaragua Canal could offer shipping companies not only shorter routes but also potentially lower fees, introducing real competition to the region and forcing the Panama Canal to adapt or risk losing its dominance. For over 100 years, the Panama Canal has been the linchpin of Atlantic-Pacific trade, a symbol of human ingenuity and a vital artery for global commerce. But now, the sheer scale and strategic backing of the Nicaraguan project present a formidable challenge, one that could shift the balance of power in international shipping. The global shipping industry, along with governments and financial institutions, are watching every development closely, aware that the stakes are incredibly high. The construction of this new waterway could trigger not just economic shifts, but also major geopolitical realignments as countries and corporations reconsider their strategies in light of a new maritime superhighway. This is about more than just infrastructure. It's about the future of global trade, the flow of goods, and the balance of power on the world stage. The emergence of the Nicaragua Canal forces a re-evaluation of the established order, compelling businesses and nations alike to rethink their assumptions about trade and connectivity. The full impact of this project is only beginning to be understood. But one thing is clear: the world is on the brink of a new era in global shipping, and the competition is just getting started. The idea of carving a canal through Nicaragua is far older than most people realize. Its origins stretch back centuries, long before the Panama Canal was even imagined. For generations, visionaries and explorers dreamed of connecting the Atlantic and Pacific through this narrow Central American isthmus, believing it to be the most direct and promising route. Spanish conquistadors, driven by the lure of gold and new trade routes, first scouted Nicaragua's rivers and lakes as a possible passage. Centuries later, U.S. engineers and politicians saw the same potential, conducting detailed surveys and drawing up ambitious plans to make the dream a reality. Yet, political intrigue, international rivalry, and the ever-present threat of Nicaragua's volcanoes shifted global attention to Panama. The Nicaraguan Canal project was shelved, its promise left to gather dust for more than 100 years, remembered only in history books and what-ifs. Now in the 21st century, Chinese billionaire Wang Jing and the HKND Group have resurrected this centuries-old vision. Their plan is more ambitious than anything before, envisioning a canal wider, deeper, and far longer than Panama's, capable of handling the world's largest ships. The proposed Nicaragua Canal would stretch over 3 times the length of Panama's, designed to accommodate the next generation of mega-vessels. It's not just a backup route, it's a bold attempt to redefine global shipping for decades to come. In a world where shipping lanes are the arteries of commerce, this canal could shift the balance, offering a faster, more efficient path for goods traveling between East and West. For China, the world's largest trading nation, such a project is more than just infrastructure. It's a strategic move to secure and diversify vital supply chains, ensuring that Chinese goods can reach global markets with fewer obstacles. By investing in Nicaragua, China gains a foothold in a critical trade corridor, expanding its influence and control over the flow of international commerce. What began as a centuries-old dream is now being transformed into a modern geopolitical strategy, one that could reshape the map of global trade and power. Once a historical footnote, the Nicaragua Canal is now poised to become a bold, headline-making move on the world stage, with the potential to change the course of history. The Nicaragua Canal is more than a commercial venture. It's a strategic move in China's global playbook. As part of the Belt and Road Initiative, it extends China's influence into the U.S.'s traditional backyard. For China, a Nicaraguan canal means a friendlier, more reliable route for its shipping, reducing dependence on U.S.-controlled choke points. It's a long-term investment in economic security and military mobility. The canal also serves as a tool of soft power, promising jobs and growth for Nicaragua, while deepening China's regional ties. Successfully building the canal would showcase China's engineering and financial might. It's a declaration of global leadership, rivaling the great infrastructure feats of the 20th century. The canal is as much about prestige as profit. The engineering behind the Nicaragua Canal is staggering. At 278 kilometers long and up to 30 meters deep, it would dwarf the Panama Canal, accommodating the world's largest ships. The project includes 2 deep-water ports, a free trade zone, an airport, and new roads, creating a commercial hub, not just a waterway. A man-made lake, Lake Atlanta, would feed the canal's locks. The most complex challenge, dredging a 105-kilometer channel through Lake Nicaragua, the region's largest freshwater source. Engineers must prevent salinization and manage massive sediment, balancing technical ambition with environmental responsibility. The workforce would number over 50,000, requiring temporary cities and vast logistical coordination. If completed, it would be one of the largest engineering feats in history. For more than 100 years, the Panama Canal has stood as the backbone of global trade, connecting the Atlantic and Pacific Oceans, and enabling the efficient movement of goods between continents. Its strategic location and engineering marvel have made it one of the most important waterways in the world, shaping the flow of international commerce and influencing global economic growth. In 2016, a major expansion project was completed, doubling the canal's capacity and allowing the passage of massive container ships, known as megaships. This upgrade reinforced the canal's dominance in world shipping, making it even more vital to the supply chains that power our modern lives. However, the canal now faces unprecedented challenges. Chief among them are severe water shortages, a direct result of climate change, and shifting weather patterns. These shortages threaten the canal's ability to operate at full capacity, putting its future as a global trade artery at risk. Restrictions on vessel traffic have led to costly bottlenecks, with ships waiting days or even weeks to pass through. This has exposed the risks of relying so heavily on a single, vulnerable route for so much of the world's trade. In response, the proposed Nicaragua Canal aims to exploit these vulnerabilities, offering a potential alternative route and introducing much-needed competition and redundancy to the region's shipping infrastructure. The Nicaragua Canal's ambitious design includes innovative hydrological solutions and the creation of a massive artificial lake, intended to address water management issues and ensure year-round operability. For the global shipping industry, reliability and predictability are paramount. The idea of a second major canal is now more attractive than ever, as companies seek to avoid costly delays and disruptions. The pressure on Panama is no longer just a theoretical concern. It's a present and growing reality, with real-world consequences for trade and logistics. The era of a single dominant player in Central American shipping is under serious threat, as new projects and changing conditions challenge the status quo. The global logistics map is poised for a dramatic shift, with the future of international trade routes hanging in the balance as new alternatives emerge and old certainties fade. The Nicaragua Canal would redraw global shipping routes overnight. Ultra-large container ships, too big for Panama, could sail directly from Asia to the U.S. East Coast and Gulf, saving days and cutting costs. South American exports like Brazilian soybeans and iron ore would reach China more efficiently, shifting the balance of commodity trade. The new canal would force both routes to compete on price and service, driving down transit fees. For shippers, this means lower costs and more options. The COVID-19 pandemic and Suez Canal blockage exposed the fragility of global supply chains. A second major waterway in the Americas would add crucial redundancy and flexibility. The Nicaragua Canal could mark a strategic evolution in global trade architecture. The era of monopoly is ending. The world's shipping map is about to change. The Nicaragua Canal could transform Nicaragua's economy, promising jobs, investment, and a leap in GDP. Ports on the U.S. East and Gulf coasts would see a surge in megaship traffic, while West Coast ports could lose market share. The $50 billion investment, mostly Chinese, deepens economic ties between China and Latin America, shifting the region's financial landscape. This could lead to new trade deals and greater use of the Chinese yuan. But risks loom. Critics question the project's transparency, financial viability, and the potential for a debt trap. If the canal fails to deliver, Nicaragua could face overwhelming obligations to its backers. The economic stakes are enormous, and the outcome is far from certain. The region's future hangs in the balance. The canal's route threatens Lake Nicaragua, Central America's largest freshwater source, risking pollution and salinization. Dredging and construction could devastate ecosystems, destroy rainforests, and displace endangered species. The project would also uproot tens of thousands of people, including indigenous communities, sparking widespread protest. Critics argue that environmental assessments are inadequate and that the social costs are being ignored. Proponents promise prosperity, but opponents see a catastrophic loss of heritage and sovereignty. The conflict has divided Nicaragua, pitting economic ambition against environmental and social justice. The true cost of the canal may far exceed its $50 billion price tag. The world is watching to see which vision prevails. The Nicaragua Canal is a bold gamble, an engineering marvel, a geopolitical power play, and a potential economic lifeline. It promises to reshape global trade, challenge Panama's dominance, and deepen China's influence in the Americas. But the risks are immense: financial uncertainty, environmental destruction, and social upheaval. The project's legacy will depend on whether it delivers prosperity or sows instability. As the world stands on the brink of a new maritime era, one question remains: are we witnessing the dawn of a more resilient global order, or the start of a new era of rivalry over the arteries of world commerce? Only time will tell.